Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And today we're here to talk about stock patterns, man. We're here to talk about stock patterns, how to get into certain stocks, and how to identify these patterns. I wanted to break this video down very simply. I was going to go straight to the TD Ameritrade chart so we can actually look at some actual stocks and be like, oh, okay, this is what it looks like. But I want to do this a little bit more simple and just give you some basic diagrams so you can understand, okay, this is simply what it is. One, the market's kind of trash right now, so it's hard to find all the ideas I'm looking for. And two, I think it's going to be a lot easier for y'all to understand it. So before we get into it, make sure you spam a like on this video, spam the like button, and also sub down below for more content like this, because we're here to make a lot of money in this market, and this channel is going to be the one to help you do it. So let's get into it right now. All right, so this is the first one, and let me preface this with saying we're doing four main stock patterns that you want to look for. These usually work. They can work in day trading scenarios. They can work in swing trade scenarios. But for today, we're going to be mainly looking at swing trade scenarios, so for longer term trends. And the first one here is the resistance rejection. If you're not familiar with how to identify support and resistance, go check out my other video. But this represents the resistance rejection. What you want to see from this pattern here, you want to identify your key resistance. So on this right here, this is your key resistance, and it pushed up through it, and then it immediately rejected. And we're going to take a look at this, but what you mainly want to see is a clear push through the resistance. You want to see a clear break of the price of resistance, and then you want to see the immediate drop down. As you can see in this big candle here, it was an immediate drop down in price, and that's where you want to take your entry, the resistance rejection. So that's our first pattern we're looking for. The second one is going to be the trading in a range strategy. This one is very cool. I think this one, I'd say this is one of the easier ones to trade if you are a beginner investor, because it's so simple to identify support and resistance. This was the very first one I traded that I was actually halfway decent in, and I was like, oh wow, this actually works, because you can just see it. You're looking at this thing, you see the stock trading in a range, go up down. You're easily able to identify this is the high, this is the low. You can see you put your stop loss there, you see you put your targets there. Simple stuff, trading in a range. Love it. Next one we're going to look at is the oversold stock. The oversold stock, I personally think these are harder to trade in my opinion compared to the trading in a range stocks. The reason why I say that, because the levels to identify where this thing is going to bounce can be a little bit more difficult, because you can get into these scenarios where the oversold stock continues to drop. In this case, if you can see this picture here, you could have bought this thing here, and maybe you bought it here, and then you thought, oh, it was going to go up, and then boom, you get dropped on, you get dropped on, and then it's dropping. So I think these can be a little bit more difficult to trade, but this is also a one technical pattern we're also going to look at in the charts here. So that's what you want to see from the oversold stock. You want to see it oversold. You can see how it's trading at a normal price, and then boom, probably some news comes out, and then it collapses on itself. And the next one, last but not least, we're going to look at is the 50 SMA Bounce. This one you can see is very simple. I like this one because it goes with the trend. As you can see, it just boom, 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 bounces off of that level there. And if you are on the long side, it's very easy because the trend is your friend in this case. You're flowing with the trend, even if you don't time it perfectly, the stock's going up anyway. So it's very easy to make money on this play here. But as we can see, those are the four ones we're going to look at, and we're going to get into some stocks so I can actually show y'all how this looks out on a real graph. Okay, so this is the first chart we're going to look at, and for this one, we're going to look at the very first pattern we were looking for, and that is the stock, the resistance rejection. This one is going to be very easy to identify. All you're going to do is draw out your support and resistance levels. So this stock right here is AMD. So you identify your support and resistance levels. Boom, we have one right here, boom, one right here, boom, another one right there. We're just drawing these gray lines here where we can identify our support and resistance levels. And I want to zoom in on this first level here because this stock does it a couple of times. So right here we have our clear resistance level where this thing topped off right here and then it started to come down. So that is our resistance level. As you see, it pushes all the way through, and then you see this big green candle, and then it immediately, boom, it drops. That is your signal for your reversal, your rejection reversal. It's where buyers come in at this level, they break price, and then it is an immediate failure, and then it drops. This one is a counter trend strategy. I like this one personally when you're trading this on the short side because shorts tend to, they're more aggressive. It doesn't take as long for shorts to come in and you hit your target. In the case of longs, usually the quote they say, bulls take the stairs while bears jump out the window. And as you can see, bears are slowly, this takes 18 days, 20 days for it to reach new highs, while bears, it only takes 8 days to get down to the low. So it's half the time the bears take to drop down, and it's just because people are scared and nervous and they're willing to panic sell a lot faster than they are to buy. So that's one example of the resistance rejection there. We're going to take a look at another one here. This is another example here. Let me draw our resistance level because it is another resistance level right here as well. Another level, as you can see, it pierced through as we drew our line. This level, it came up. We identified our clear resistance level. It came up, pierced through, and then immediately dropped down and rejected. And that's when we get our entry signal. That's when we would hop in because our price has been rejected, that we identified our key resistance level has been rejected. We hop in and we take it short and we ride it all the way down to our target. These are really cool. I love this strategy. This is one of my personal favorites. I think people that are definitely trading want to get into trading short. I think this is the #1 strategy that you can use when trading short because of how aggressive these plays are, how quickly it pays out in comparison to taking a stock long. It may take a little bit longer. All right, so next we're going to look at the trading in the range strategy, and I use this stock a lot. If you watch any of my previous videos, I use this stock all the time, and this is Walmart. I think Walmart is just a great example of how to trade stocks. It has all the different patterns in there, all the different setups, and as you can see, we identified our top resistance level and our top support level. So when we're trading in a range, we want to identify those higher bounds and those lower bounds. And as you can see, Walmart, I'm going to highlight those levels here. Walmart has been trading in a range. You can see this clear level, boom, bounced off here, boom, bounced off here, boom, bounced off here. So maybe in the next few days, we'll get another bounce here. And that's where we want to take our shot at this stock. This is where we want to get in at this 134.95-ish level. Maybe it doesn't tag it perfectly, but we want to get in around that level. And then as you can see, it's very simple to identify. This is the highs. Boom, 152. Boom, 152. Boom. It got a little higher, hit 153, but still the same general level there. And this is the trading in a range strategy. I love this strategy. Very simple strategy for people getting into it. You're just identifying your support and resistance, putting a stop loss right underneath there, and then getting in, riding it up. It's kind of similar to the resistance rejection. As you can see, you can see a little bit of resistance rejection here as well. But for this one, you can take this one long as well and trade in that range. And you can take this both short and long because you see this box that is taking place there where it's not going any higher, it's not going any lower. It's just comfortable in this price range. And it's very, you can make a lot of money trading this for months and months. This happened for the whole year. So if you take advantage of this on Walmart, you could have traded this long, short, and made a good chunk of change in your money for the whole year, because this thing has not broken its pattern for a very long time. If anybody wants to play Walmart right now, this is the play. Once it gets around 136, 135, 134 level, take it long, ride it up to 152. You're going to make money if it doesn't break. Again, put your risk. Don't forget to put your stop loss in place just in case anything goes wrong. But as you can see from the technical pattern here, it's been paying out for over a year. All right, so the next one we are going to look at our ADP. This is going to be our let me pull that one up. And this one can be both, but we're going to look at this one for a 50 moving average bounce play. As you can see here, this is the 50 moving average here. This is going to be the blue line. This is our 50 moving average. And as you can see, I'm going to draw those levels where the 50 moving average was a dynamic support level. You take these plays here, boom, it bounces off of the support. Again, right here, boom, another one right here, boom. And as you can see, if you were to play this and you just hop in every time it hits that 50 SMA level, most of the time you're going to make money. Of course, you want to put your stop loss in place, but as you can see, this level has become a dynamic resistance level over time on these charts. Boom, it just immediately pierces up, boom, bounces right back off, boom, bounces right back off, boom, bounces right back off. And a lot of people play this. This is a very popular strategy. And the reason why this works is just the psychology of it. People are looking at these levels. We can even see it here again, back here. Little minor levels it's playing. Boom, right off of the 50. This is a really nice green candle. Boom, right off of the 50. Boom, right off of the 50. And what you can do is just consistently play that. As soon as it hits 50, you set your risk parameters, your risk to reward. You want to make sure it's 2 to 1. So you put your support level right there, your stop loss right below it. You set your target toward the highs, and then you ride it out. Boom. And the reason why this works so well, what's important about this is very key to the 50. When you're playing these bounce plays, you want to make sure the trend is in your favor. You don't want to play stuff where it's already trending down and you're looking to take it long. You want to play stuff that it's uptrending. You're buying the dip. You're buying it when it's hitting a key dynamic resistance level, which is the 50 moving average in this case. So you have a good risk to reward. You have a high probability. 1, you're playing a good stock. 2, you're playing with the trend, so buyers are going to consistently come in. And 3, you're playing a level that is resistant. So that's why you want to play these. These work very well, as you can see from this chart here. ADP, a great example of a 50 50 SMA bounce. And last but not least, I'm going to show you a couple of charts for this one. One is ADP again, because it's just a great example of a stock to play. Look at this one here. This is our RSI indicator. I also did a video on this about the top indicators to play. This is one of them. The RSI is a great indicator to look at. And this one identifies when stocks are oversold or overbought. When it turns blue, that means the stock is oversold. So what that means is it's a good idea to potentially hop into this. So ADP currently is oversold. So that means sellers have aggressively pushed this thing down. The indicator saying maybe they pushed it down too far, and it'd be a great buying opportunity. We have not yet seen what this thing is going to do, but we do see that it's oversold. But we can look at the prior history and say when it's gotten to these levels, i.e. right here. Let's actually, let me zoom in one at a time. This one right here, when it got right here, when it turned blue, RSI oversold, it began to push up. Second time right here, when it got to this level, boom, it began to push up. Third time right here, I think this was during the 2020 pandemic. It was giving an oversold signal in this level range here. Boom, it began to push up. The thing about this indicator, it's not 100% perfect. Again, you need to put your risk parameters in place, because as you can see here in this one, it dropped down and continued to drop. This was during the 2020 pandemic, where everything was just collapsing. So you need to be aware of that. Make sure you put your risk parameters. Here's another example of where it dropped down. Boom, drop down. You get in, and it pushes all the way up. You're able to make money on that. So that's one of the oversold patterns. You just want to set your risk parameters in place, and it's cool because you're getting in basically at the low, and it makes sense for people. I know with these different strategies, you need to figure out which one works for you, because some people, it makes sense for them to, okay, I'm buying the dip, or I'm buying a stock that is already trending. Some people feel really comfortable just buying stocks that are aggressively sold off. It makes sense to them buying something really cheap versus buying a stock that's been sitting in a range for a long time. But with each of these strategies, you identify your support, your resistance levels, maybe your dynamic support and resistance level, or your key levels where the high probability chance of this thing turning based on prior history. But I do want to show you one more chart for the oversold pattern as well. Let me pull that up for y'all. Q. Okay, so this is another one that is also oversold. You can see this is aggressively oversold right here. So this is another great opportunity for you to hop in as well. But for each of these strategies, you just want to make sure you're identifying your stop loss level, your target level, your risk to reward, and to make sure you're actually getting a good percentage, good return on your money. Let's look at this. So let's say you hop in this right now and it goes up to the new highs again. You're looking at a 12% return, which is amazing. A 12% return, maybe you risk 2%. Look at that, 2% for 12. That's like a 5-to-1, 6-to-1 ratio, something like that. That's great. That's great on your money. So just look at each one of these strategies. What I would recommend, look at each one, test each one out, and then when you find one that you like, get consistent with it. Do it every day. Study it, practice it. And the one thing that really messed me up that I can recommend for people, when you're looking for a strategy and you're like, it was working for a little bit, and then the next few days it doesn't work, let me switch. No, stick. If it works for you and it's been working for a couple of days, couple of weeks, and then it starts failing for a little bit, stick in there, hang in there. Strategies are not going to work every single day, every single month. You're going to have those down days. You're going to have those down weeks. You just need to let the strategy play out. See it work. It's like a relationship. It's going to go through its low phases, and you're going to go through your high phases. But you need to make sure that long term, it's working over the course of a long period. It actually is effective and working. And that's what you want to do with each of these strategies. All these strategies work. All these strategies are effective. You just need to be able to play them. But that's going to wrap it up. Those are the 4 main strategies, the best strategies that I'm familiar with, that I know that I use in my own trading to make money in the stock market. Let me know down in the comment section below if you have any other strategies that you like using. Maybe you have some crazy Fibonacci strategy or whatever strategy, or VWAP strategy, or tweet strategy or something like that. Elon tweets and you get in, or something like that. Put it down in the comment section down below so we can chop it up. Maybe you'll give me a new strategy to play. But that's what it's all about. All the comment section down below. But that's gonna wrap it up. It's been your boy, Blessed Applesauce. Stay blessed, and I'm gonna see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.